Alrighty, welcome back to the channel, folks. You've arrived at No Ties Investing. I am Tyler Hearn, and if you've been on the channel before, this is my personal retailer investing journey. Just your basic wins and losses of a retail trader, what you might expect if you decided to get involved in investing as a beginner. I've been a speculator for many years, but now I'm going long, and I took control of my own retirement. So now we're working on a Roth IRA and a traditional IRA. And today I'm going to show you how I'm going to converge these accounts and some of the moves I've made in the portfolio. So if you look over here, we got, this is the small traditional account that I've been covering on the channel, and it is up to about 14,500. Here's the return profile on it. 116% P&L since I opened the account back in September right here. And if you look over here, this is the money weighted average. So I haven't added any cash to these accounts since I got them started. So there's no skew in this. Now, if I added cash, you'd see this thing jump up and it kind of mess it up. But then it's going to happen soon in my Roth account, because the goal is to transfer my entire traditional IRA into the Roth account. And I will go over it real quick why. I'm going to put a short video out there as to like all the benefits of a Roth account and why I think if you're a small time investor just getting started, you should really get started with the Roth account. Okay. Real quick, guys, if you enjoy this content, please hit that like button. I can't thank you enough. If you hit that like button for me, and if you, by the end of the video, you enjoyed this, you want to subscribe, feel free to subscribe. But all right, so this is the account you were just looking at right here. Whirlpool we sold. I'm going to go over that shortly. These are the other stocks that are within that account. And this is the Roth account that I'm wanting to transfer to. Right. These screenshots were done. This was this morning to update this. We had a long weekend, long past couple of days. So this is it updated. I didn't want to replace any of this. Nothing has changed here other than that number there. All right. So why am I wanting to transfer my traditional IRA into my Roth? And it's real simple. It is tax-free earnings. Now, what that is it's self-explanatory. As I earn in my Roth account, I will not have to pay taxes on that in the future, as opposed to the traditional IRA. When I make this transfer of $14,500 or whatever it is, when I finally make the transfer, and I will have to pay taxes on it. Whether I transferred it in stock or in cash, I'm going to have to pay taxes for it because it's in a traditional IRA, and they gave me a tax benefit when I deposited into that traditional IRA. That's different than the Roth. If I have to make deposits in the Roth, which I will at the beginning of next year, I don't get any tax benefits from that. I just pay my taxes on the money that I earn or the money that I've put in there, and it just comes straight out of my bank account, like just like you would if you put it into a broker's account, right? All right, so that is the plan. And that's the short half of it. One of the other cool things is that if you can make a 5-year commitment to a Roth IRA, you can pull those contributions out penalty free after 5 years. So I encourage anybody that's wanting to get involved in investing, you should have more than a 5-year plan anyways. So that's my take on that. Now, the reason I have to cash up in that account has nothing to do with the way the current rules work. These are Webull's rules, and they're dumb. But I have to, say when I transferred over to Webull, I owned a little bit of stock, just a little bit, but I transferred those shares over. And now to do an internal transfer, I can transfer cash. And I'd like to do it all in one transaction. I'm not sure if that's going to happen because it's difficult, because I don't want to sell my stock. I don't want to reposition. It's going to mess up my percentages. It's going to make you guys not really think that I'm doing any good because I don't have the high percentage returns or whatever. But I think, I don't know, cash talks, right? But it's a Webull thing. And I got nothing else bad to say about Webull. I will say that I like the software. It works great. I don't know about holding crypto with them. I don't know, but you're insured on your stock though. So that's my take on that. So, shorthand, right? All right. So this is a screenshot I took back in June 20th. We were at around 32,000, a little over. And now this is a screenshot I took just this morning. So 36,212, give or take, up 4,000 over a month. Not bad for the size of the account, right? With that said, a lot of this is in cash, so I don't even have the full thing invested on either account. Even in my traditional account, it's still like 5,500 or so of that's in cash. So just wanted to show that there. It does keep up with it. You can only view this on your phone, on that mobile app, not the desktop app. I have no idea. They need to work on they still got a few things to work on, but as far as compared to Robinhood, I greatly appreciate the Webull app better. All right. So the first stock I sold, cashing up, keep in mind, was Lyft. A little over $600 in profits between the two accounts here. Now, I didn't sell Lyft for the lack of confidence in the company surviving over the long haul. This is a short term. The size of my account is smaller, so I feel forced to do a little bit of trading, a little swing trading. And I just want to see how, it's been an underperformer, basically. It's underperformed, and those are the ones I'm kind of cutting, and I'm just cashing up, man. I mean, market's at all-time highs. Like every other day, we're hitting an all-time high. What better time to start getting some cash together and decide to, where you're going to reinvest that cash? As you know, some of my other positions I hold, I wished I would have bought more Cheesecake. Look at that return profile on Cheesecake, 46% return, and I am ultra bullish on Cheesecake. Corsair, meh. I think it's coming, but it's going to be a wait. It's going to be some waiting time. We're going to wait on the new consoles and stuff to be launched. See if they can get into some other products, streaming as it grows. They've got the Elgato stuff. I haven't really covered that one on the channel. Not sure how I feel about it. Advanced Micro Devices, ultra bullish. Only got 2 shares in that one. You see, I got 23 here in the Roth account. But back to Lyft. Look, I saw this the other day, which, take this with a grain of salt. But Waymo is taking market share away from Lyft. And there's they got a lot of discussion on Twitter, blah, blah, blah. Waymo, if you're not aware, Waymo is a like robo-taxi type service like Tesla's pushing. And that is, there's a bunch of market hype around it, in my opinion. Because everybody's not going to do I'm not getting in a fucking robo-taxi. I'm from Mississippi. I'm just fine driving. I don't even like flying. So you're not going to get somebody like me. And I don't know how many people are like me. If you're like, I'm not getting in a robo-taxi, please drop that in the comments. Cause I'm not going to, it's not going to happen in this decade, or I have no idea. Every vehicle will have to be a robo-taxi before it's going to be safe, like ultra safe, right? Because people suck at driving. I mean, not to say that, I have trust in my driving, but not everybody else's. But, and as long as it took Uber to become profitable and Lyft as well, I just don't think it's going to be just an absolute banger real soon. And it's not to say I wouldn't buy these shares back if they got cheap enough. I may would purchase them back. They did just get profitable. I covered that in the past. This is their estimates, earning estimates going forward. By 2026, they should be earning 46 cents per share. And I think if they can achieve this, you'll see a good appreciation on that share price. All right. Average price target 17 from kind of where we're at right now, 14.30. You know, it's a good little return, but you know, I like to see a little bit higher price target for the year. Right here is their revenue growth. You know, they had a little hiccup in 2020. Everybody did. Then 2021, 2022, it continued to grow, but then you saw the share price take a huge dip in 2022 due to their profitability. And now as the revenue has risen substantially, you know, over $1.5 billion from 2022, they're just barely profitable. Now, if this continues to grow, you will see them become more you should. You're right. They did do a share buyback recently. So there you go. That's all I'm going to say on Lyft. It's not a bad company. I think over time, you know, but I cashed up. Sold 100 shares of Fubo out of the rollover IRA. There's the return profile on that. I did see this. I took a screenshot of this. You know, it's growing revenue and margins despite tough sports streaming market. I don't think that's a tough market. I don't see how. Everybody, it's not around here. People watch sports. People always watch sports. They're going to keep watching sports. The stock is undervalued 26%. It makes it appealing, but it was a lot more appealing when it was way undervalued before the Disney deal and everything, which that's what this says. Significant regulatory industry risk remain, holding advised until merger outcome is clear. Now that could be a buy the rumor, sell the news, aka sell before the news, because we don't know how that's going to work out, if they're going to get blocked or what from the, you know, Hulu Live, ESPN thing that they're doing. Yeah, so I'm cashing up in the Fubo. I'm not going to sell all my shares though. I'm going to keep an investment in Fubo, a small investment, but it's a high risk, high reward play, right? All right, now the other stock I'm a little more critical of this one. Whirlpool, I sold those. This is the return profile. Didn't have much, but I just don't see any point in holding it because I don't have any confidence in this housing market right now. I got no confidence. I don't care what CNBC says. I don't care how much smoke they want to blow up everybody's ass. It's not in a good place. It's clearly not in a good place. And when I see stuff like this, I lose even more confidence. They went from this just a month and a half ago, and then if you were watching CNBC just a week ago, they were like, "Oh, it's getting a little better." Like the narrative changes, like they're just up and down with people right now.
Speaking of housing, got new data out, including new home construction. Diana Olick, this is a little bit hyperbolistic. You just heard us talk about it. I don't want to say nobody's building homes because there's still homes being built.
There are still homes being built, just the lowest in 5 years. Yeah, definitely. So we got the May read this morning on housing starts and permits, and they were well below expectations. Let me break it down for you. Multifamily starts dropped over 30% month to month. This is a volatile monthly number, but we have seen a record supply of new apartment units delivered in the last few years, with more this year, so the development pipeline has been slowing down. Interesting, though, that permits, which are a future indicator of construction, are higher, and that's because the market is now seeing stronger demand and people staying in rentals longer. Why? Because they're not buying homes. You see that in the single-family starts number, flat for the month and down over 7% from a year ago. This should come as no surprise given the very low builder sentiment report we got yesterday and a weaker outlook from Lennar's quarterly earnings report Monday. The consumer is just not willing or not able to make such a large investment given high costs, high rates, and overall economic uncertainty. You see that.
Okay, so there you have it. Yeah, totally. Like, and you're seeing that whole permits going up because they're just gonna build more rental property. Like, don't, I'll attach my last, take on the housing market video. I'll put that in here. But don't get it confused. The goal is to create forever renters out of would-be home buyers. That's my opinion. You can think what you want. everybody's got their opinion, but yeah, I think those permits are going up because they're going to make more rental property, man. There's less and less home buyers every year. And right now it's more expensive than ever. And I think it's by design. I don't want to jump into conspiracies or nothing, but sucks, man. Another one.
Getting harder and harder to sell a home with persistent high prices, high mortgage rates, economic concerns weighing on the consumer. So sellers are trying a new tactic that could have a big impact on some investors. Diana Olick has the details in today's Property Play. Hi, Diana.
Hey, Morgan. Yeah, frustrated sellers reluctant to lower their prices anymore are instead putting their homes up for rent, so-called accidental landlords. And they're
I didn't even watch all this. This was like, I just saw this. I heard her first little bit. I was like, I'll play that in the channel. I'll stop it right there. But there you go. That my confidence goes a little bit out the door there. And if you just look up housing market and just scroll, like all you got to type is housing market and like, look at this. Housing market headwinds. Housing market crash 2.0. Housing market will drop 60%. This is exactly what happened right before the housing prices dropped. Like one after another after another. And I mean, you can just scroll. Right. And YouTubers are covering this, but CNBC doesn't seem to have the same outlook. The mainstream media doesn't seem to have the same outlook. And I'm not going to harp on it anymore, but I don't have any confidence in the housing market. I sold my Whirlpool stock. Some other reasons I jumped into it were because this dividend seemed so appealing. And like I said, I'm learning in real time. And this PE ratio is outrageous because they're just losing earnings and revenue back to back. I could show you a revenue where it's been just trending down. You know, if you want to do any amount of research in it, you can find that easily. Like the Ford PE, that seems okay, but that's an opinion. Ford PE is what is expected, and we know that Wall Street's been wrong before, so I'm just not crazy confident in it. I might look back and think, oh well, shit, maybe I should have held, but it ain't gonna be like a crazy return profile for somebody who's, somebody wanted to make a small investment that really wanted to have a good dividend stock. Maybe I just don't think they're going to be able to maintain this dividend. I think that's coming today. They have earnings today. All right. Where are they at? They're in this Whirlpool right there. Yeah. They're doing earnings today. So we'll see after the close. That's in 2.5 hours. Also the debt equity ratio right here. I looked up like what a proper debt to equity ratio is, and might be high unless it's common in the industry. So I guess it falls within consumer goods or utilities. Ain't neither one of those a 3, and Whirlpool is, so we're close to it. Too close for comfort. So that's a high debt to. They got a lot of debt, and I just think it's just not really meeting. It's not really going to meet my goals. So. Sold it. I'm out. We do have earnings coming up. Oh, the other thing before and Trump just proposed this no capital gains on real estate. They're doing everything they can to come up with an idea to help this housing market, and it's just not because Powell's not willing to drop the interest rate because it would cause more inflation. They know that. They won't say that. And that's, so they're coming up, they're going to try to come up with all these other something to try to help it out. And this ain't going to help. It's not going to help. Removing no capital gains. You're encouraging selling, not buying. I just don't see it having a huge impact. So looks like they're scraping for, whatever they can to help it out. But I think we all know what it's going to take, and it's going to take those prices that payment coming down. Fuck the prices. The payment has to come down. People cannot afford the payment. I'm not about to go get a house. I don't care how much. If I triple double, I'm still not going to get a house. It's too expensive. The payment's too expensive. I'm not buying. All right. So we do got earnings coming this week. We'll see how SoFi does. I've got a large portion of my portfolio in SoFi. This one's 135 shares, 175 shares here, 185. I sold 10 shares of that, so I took a little profit. Nothing big, just like I said, cashing up. We'll see how earnings go. I am going to do another video before the end of the week. Hope you guys enjoyed my shirt right here. I actually have sunburns and this is really comfortable, but I do like wearing these shirts. They make me happy. So I'll look for any excuse. I'm not going to make an excuse. I'm wearing them. Yeah, we'll see how earnings go with SoFi. I'll cover that. That'll be tomorrow before the open. I may go live for that. I expect it to be a good I expect it to be good, but I don't know if I really expect the share price to just fire up, even if they hit earnings expectations. I did do a short on SoFi, so if you want to check that out, it's out there. I don't think I have any other stocks that are going to be reporting this week. AMD will be reporting next week. You know, I don't know how that's going to go, but I've been wanting to buy a dip on that thing, but those dips have been shallow and far between. And I wish I had more, but we're going to see how that earnings goes. So look forward to that next week. Guys, I appreciate you coming along for this episode, and we will see you in the next one. And I do appreciate it. If you guys want to leave that like button, you want to subscribe, feel free. And I will see you next time. Peace out.